I don't know if you've been paying attention to the market at all recently, but there seems to be a new stock going rippity, skippity, doodah. A new meme favorite that's taking the world by surprise. Now, obviously, the people who have gone long are stoked about it. Now, obviously, the people betting against it saying this is fundamentally overvalued and it doesn't deserve to be here, they're getting absolutely steamrolled. And at the time that I'm filming this, it's really no different whatsoever. I'm talking about TUP, Tupperware Brand Corporation. Here's a little bit of a looky-see of how it's performed recently. I mean, over the past week, up 277%. Over the past month, it is up over 600%. And on the year to date, making a recovery in the green, up 34%. But this really started to get going at the end of July. And as once again, I'm filming this just for posterity's sake, it is currently up 777%. That is wild. And of course, when you make those kinds of gains in a handful of days, it starts to turn some heads. Tupperware stock surges to build on July gains. It is going, and I want to dive into what's going on and maybe give some opinions of myself of if I like it, if I don't like it. Now, I just want to take a quick beat right here to let all of you know I have no position on TUP. I'm not long, I'm not short, I don't have calls, I don't have puts, I have nothing to do with it. I'm just tracking it as a story because it's fun to see what's going on with some of these high flyers. Tupperware pops 800% surge as meme trade burns shorts. Tupperware Brands Corp has been warning for months that it may go bust, but that isn't keeping retail investors away from powering an eye-popping rally reminiscent of a Rona-era meme stock craze. You've seen a kind of a little bit of a trend here where there's companies that are particularly fundamentally weak and then they're getting targeted by shorts and people shrug their shoulders and they think, hey, be kind of funny if things started to go the other way. The iconic food storage container company has surged more than 800% over the past 2 weeks as investors pile into the stock, dinging short sellers and sparking excitement across retail trader platforms. Well, of course, when you go up 800% in a week and a half, there are people making disgusting gains, and I applaud them. I wish I was in on it. I'm not, but if you're making money, congrats to you. Retail traders have bought 15 million worth of Tupperware shares since July 21st, when the company's market value stood at 40 million, data from Vanda Securities shows. Since then, it's more than quintupled to 224 million. The company, the board, they're probably sitting there thinking, what do we possibly do with this? Tupperware's ticker was among those trending on retail trader chat room stock tweets, while mentions on Reddit's Wall Street Bets forum jumped alongside with the surging stock price. Yes, because obviously retail's very excited in what is exciting, and it makes it get even crazier. It's kind of a self-fulfilling prophecy of sorts. That's despite the company warning since April that it had substantial doubt as a going concern and had engaged in financial advisors to explore options. In March, it identified a material weakness in its internal controls that forced it to restate prior results. Once again, the trend of a fundamentally weak entity getting shorted, and then people end up buying it because the people who were maybe a little bit early on the short just end up getting absolutely decimated. The stock's recent gains have cost short sellers roughly 37 million in paper losses over the past month, and as of now, it seems that number's growing and growing and growing. Still, the stock surge is only increasing short interest. Roughly 30% of the shares available for trading are currently sold short, and the highest level in more than a year, and a spike from less than 10% in November. So I got you some updated numbers. At the time that I'm filming this, the short interest is estimated to be just below 31%. The shares on loan are 14 million, and the cost to borrow is 134% as of this morning. If I were to do this live right now, the average cost to borrow is around 305% for today. And then finally, the utilization is maxed out, as in all the shares as of yesterday at close that could go on loan to potentially be short are on loan and could potentially be short. So the entire pool of shares to take a legal, legitimate short position are out there. They're at least on loan. Now, that doesn't mean that they're all short against the company, but they are at least all taken by someone. So when we look at this stock, and if you're listening to this, if you're paying attention to this, if you have any interest in this, there's a pretty good and evident question here is, how much longer can it go? I have a lot of thoughts on that, and I want to share it with you right now. First of all, I wouldn't diamond hand it. I think just arbitrarily saying I'm holding it forever is silly. You're in this to make money, which means you need an entry plan and an exit plan. You don't just have an entry plan and then say I'm diamond handing it and hold it forever. We know historically when we have these high flyers, they only fly for a little bit before they run out of gas and come back down. The question is, how do you pinpoint that top? It's not like these things shoot up and then just go sideways. They shoot up and they come down most of the time more aggressively than they even went up. This is how things have played out historically. I don't know how it's going to play out this time, but if I were in it, once again, I'm not, I would just do a trend following methodology. I would either do a trailing stop loss, I would do a mental trailing stop loss, I'd be paying attention to the previous daily bar's low, and as long as we're trending up, higher highs, higher lows, I would be in the play. But as soon as things start to look a little bit weak, as soon as maybe there's a big red day on some serious volume, I'd be like, okay, I'm stoked about these gains. Now, from this point, you might be questioning, what could keep it going? Well, in the most rudimentary level, this is just when there's more buying aggression than there is selling aggression. When there is that imbalance, price obviously goes up. Price is always looking to be at an equilibrium of when the buyers and the sellers are equally strength. If there's more buying, more aggressive buying going on, price goes up. And then if there's more aggressive selling on, then price goes down. So the question here is, okay, what could produce more buying? Well, we're going to be talking about squeezes, but remember, there's two major types of squeezes and they can kind of cause each other. The first one is a good old-fashioned short squeeze. These shorts, 31% of the free float is bet against this company. So as it continues to go up, people might be like, wow, my risk is being hit. To close the short position, well, first of all, to create it, you have to sell the stock. To close it, you have to buy it back. Well, when you're buying it back to say, hey, I'm throwing in the towel, I admit defeat, that adds more buying pressure. The other thing right here. So remember, options, it's a single dealer market. So basically when people are YOLOing into calls, they're saying, okay, cool, give me the right to buy this stock at a certain price on or before a certain date. That's the expiration date. Well, the people who sell all those calls, these option market makers, at first they're like, cool, I'm just going to collect this premium. But as things start to trend upward and more of these calls go in the money, they have to balance their book out. They have to balance out the risk, and they do so by buying the underlying equity from the market. So more buying pressure. So in the options world, you have what's referred to as a gamma squeeze. In the equities world, you have what's referred to as a stock squeeze, but they're both just squeezes because really what they're representing is kind of a snowball effect of buying pressure. Now, eventually, when the calls end up expiring and they don't have to have that anymore, or if the shorts end up getting bigger, or if the people who are going long run out of capital, that's kind of when the party comes to an end. As long as we're seeing that price trending upward, it's continuing to put pressure on really the options market makers who sold a bunch of calls, and it's also putting quite a bit of pressure on the actual shorts on the equity. So no one on this planet, no one on God's green earth could tell you where this is going to go to. The goal here is to get the meat of the move. You probably didn't bottom ticket. You're probably not going to top ticket. That should not be your goal. The goal should be like, hey, it's moving. Okay. And it starts to bend down. You take your money. I would not diamond hand this. I would simply employ a trend following methodology. So Tupperware, as I alluded to before, clearly the high flyer of the summer session among some other ones, but this one is ripping like an absolute monster. I didn't get a piece of it. I hope you did. And I wish you the best of luck as you're kind of managing the exit of this trade. I hope it keeps going. I hope the people who are betting against it, it's fun to watch. It's enjoyable to watch. I think this type of stuff teaches a lot of people about the market, especially when it comes to the world of risk management. But if you're in it, if you got lucky enough to get in early, if you were degenerate enough to play it, hey, just keep your risk intact. Don't get greedy. I want to wrap this up by a golden reminder. Within the market, the bulls and the bears eat, the hogs get slaughtered. Do not be greedy. And like I said before, I wish you luck with this particular trade.